Was Abhishek Bansal, CFO at Justdial, is with us. Sir, your traffic growth and feet on the street effort continues to pay well, but the pace of paid campaign addition has slowed a tad bit due to weakness in the SME business sentiment. How would you rate this key metric performance?
See, last particular quarter, firstly on the operating side, traffic at a very healthy 25% year-on-year growth. Mobile traffic, which forms almost 80% of the overall traffic, grew at about 36% year-on-year. On mobile platforms alone, we now have 125 million plus unique users on a quarterly basis. So traffic is the first and foremost indicator that we track. The more number of users coming to the platform, obviously, it should result in more number of SMEs subscribing with us, and the same subscribing SME paying more because they get better visibility. On the financial side, revenue had a healthy 13.5% year-on-year growth. Adjusted EBITDA margin was about 29%. Other income on our treasury portfolio was very strong at about 31 crores, which resulted in a PAT of about 57 crores for the quarter, which grew at about 48% year-on-year. So overall, a very healthy or a decent quarter, I would say.
But given the macro challenges, it would seem difficult to continue with a paid campaign addition run rate of 15K in the second quarter, right? And as share of Tier 2 and Tier 3 also rises, what's the realization trajectory going to look like?
See, paid listings addition, if you see, the best would be to look at it on a 3-4 quarter basis. So 4 quarters back, we were at about 452,000 paid campaigns, which have crossed 515,000 paid campaigns this particular quarter. So from previous quarter, the decline is hardly anything. So 14-15,000 quarterly addition run rate we have been able to maintain despite a reasonably high base. On realizations, again, for last 3-4 quarters, realizations have been flattish, though there is a downward pressure expected on realizations because the mix is changing. The Tier 2, Tier 3 cities where our ticket size is much lower, they are gaining share. Overall, as I see, since we are investing into adding people in our feet on street team, so that should help us continue to have a good amount of paid campaign additions. On the realizations, even if we are able to maintain realizations, that I think is positive, though our effort will be to get some incremental growth from realizations as well.
For your SME clients, do you see a pickup in sentiments by festive period? Is it affecting spends on JD products?
On the ground, yes, SMEs in the economy are going through a tough phase. So as I said that economy shall go through its own cycles, but we have to ensure that we keep improving our products so that SMEs still see value in spending with our particular platform. Yes, there will be challenges in terms of the same SME which was easily accepting a 12-15% hike in earlier years. They might not be willing to pay that kind of hike. So short term, such particular challenges could be there, but we are trying to ensure that whatever steps we take, maybe in few quarters, whatever macro challenges remain, but in long term, as and when we see recovery, there should be an exponential growth that we should be seeing.
Do you see this EBITDA margin range of 28 to 29% holding up for the next couple of quarters?
So advertising, we spent about 19 crores last quarter. The run rate of 17-18 crores a quarter is maintained for last 3 quarters, and we expect to maintain the same going forward as well. This coupled with whatever investments that we are doing in adding to our feet on street team, despite that, I think we should be able to maintain margins in the current range that we are seeing.
What is the growth outlook for FY20? Can you share that?
See, as I said that in our particular business, a lot depends on month on month, quarter on quarter basis, the efforts we put in terms of getting SMEs to actually sign up as paid listings on our particular platform. So it is slightly, though we have some particular visibility going forward, but it is difficult to exactly pinpoint a certain range. So at this point of time, as I said, that we are trying to ensure that we get 2 or 3 core parameters right, which is traffic growth, adding to our particular sales team, improving our particular product, and that should help us have a decent, healthy top line and margins going forward.
Thank you so much, Mr. Bansal, for joining us and sharing with us your way forward as well for the coming quarters, not only dissecting the Q1 numbers.